Okay, we're looking at the Swiss franc, US dollar Swiss franc, and what I want to show you here is we've had this nice trend down, nice downtrend, and the trend line, the downtrend line has been broken. Price has moved in these nice ranges here, as we can see. We are now moving down towards these lows here, but the MACD is in a state of divergence. In fact, these lows here were already a divergent state, offering a good trading opportunity independently right in here. We are now moving lower as we are still in a state of divergence, and we are bouncing at these lows right here. Bouncing at the lows, and for good reason. And we're now seeing the response from the bounce of the lows. This is a 4-hour chart or 240-minute chart. So as we see here, MACD divergence, the market is coming down, testing the lows. You want to trade a divergence when price is being supported or resisted at a specific level, giving it a reason to bounce in addition to the divergence itself. Okay. Now let's go down to the 60-minute chart. Here is our low. Let me give you a specific price on this on the 4-hour charts just so that you can see, so that you're with me. This price right here, you see this low right here, we are at 120.20 to 25, let's say. All right, you see the number down here, 120.20 to 25. That's our low where price is currently bouncing. And as we pull up the 1-hour chart, we are at 120.20, so this gives us just a more finite look, and it also gives you a feel for the difference between the 1-hour and the 4-hour. So we're at 120.20. If we get a closer look, here's the lows that we saw on the 4-hour chart. Let's spread it out again. Now we see price responding to the lows very nicely. Even just the bounce alone, if you trade it long into that low, then just the bounce alone should pay you something, even if it decides to come back down and move through the lows. But as you can see here, this low here created the MACD low, and as price has moved lower, we are in a state of divergence. MACD has been neutralizing or diverging even though price has been making lower lows. Now we get our response up and away from the lows. A very, very nice response, up and away from the lows. This dark red line is our central pivot, and this is our first support level, which also converges with the support. And we bounce. And we bounce up to this level of resistance. It all makes sense. We also bounce at this level of resistance. You see? You see how the market moves in these price swings relative to previous price action. Let's move down to a 15-minute chart. Here's our lows at 120.1720, as we saw earlier. Price has been drifting lower right down to the lows, and we see our price response at the lows. On the 15-minute chart, the MACD is also in a state of neutralization or divergence. Here, price moving lower, MACD. As price is moving, this is consolidating through a weekend, so as price consolidates and drifts through the weekend, there's very little stimulus being pushed into MACD, so we neutralize, and then here we diverge, and price responds by moving higher. So we have a divergence on all accounts. We have a divergence on the We have a divergence on the 4-hour, the 1-hour, and the 15-minute, all combined, all at a base level of support, and price responds accordingly. The more MACD divergence you have on more time frames, the higher the probability the bounce. As well, the fact that it was a key level also suggests that we are very likely to see a bounce at that level. The MACD is simply one component that further supports the probability of a bounce at this level.